Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by David Bartosiak. And we've got two Zacks #1 ranked strong buys for you this week, as always. But I'm going to lead it off with my stock, which is one of the Homebuilders. The Homebuilders are back to being top Zacks ranks once again, and my choice is KB Home. The ticker is KBH. They just reported earnings. They're on the fiscal year. They reported first quarter, and again, it was another stellar quarter. We're into the home buying season, so we got a lot of good color on what's happening with the home buyers out there. They are out in force, and orders are starting to rebound for these home builders. So let's take a look at what makes KB Home a Zacks #1 rank right now. Obviously, it's going to be rising earnings estimates, but let's see what the analysts are thinking with KB Homes right now. So I did want to point out on KB Home, when you go to the Zacks homepage for KB Home, when you put in that ticker, you can see it's a Zacks #1 rank there. But this is a rare stock that also has A's across the board for the style scores even, and the A for the VGM, which is the overall score. And on the industry rank, it is in the top 22% now, the home builders. So that's also a very positive thing. So overall, it doesn't get much better than this. The #1 rank plus the A's across the board on the style scores and the high industry rank. So KB Home, something good is going on in this home builder stocks. Now, I always look at the detailed estimates on these because that's where we'll see what's happening with the rank. And you can scroll down when you hit that detailed estimates page. So earnings estimates, there it is. And you can see, if you scroll down a little bit more, in agreement why this is a Zacks #1 rank. So it just reported earnings on March 20th, and you can see that in what the analysts are doing for the full year. That was the first quarter, so we're looking into the second quarter now. But 6 estimates are up for this fiscal year in the last 30 days since that earnings report, and for next year as well. Nobody is cutting. So even though home builders have been doing well the last couple of quarters, the analysts are still kind of behind with what's happening. And if you scroll down further, you'll see what they're raising it to. So 30 days ago, it was at 759. And now look at it for the full year, now at 801. That is a big jump up. And the same looks true for next fiscal year. They're raising it from 838 all the way to 872. So these are not small revisions. That's also why you're going to get the Zacks #1 rank, because we do look at magnitude. Now down here, I wanted to go down and look. You can see the surprises here. And for the first quarter, which they just reported, they did have the surprise there, but it was just 20 cents. So yes, the analysts, if you get a big beat, like a 20-cent beat, they are going to incorporate that a lot of times into the estimates and raise those estimates on a big beat. But this raise goes beyond just that 20 cents. As you can see, it was 759. Now it's at 801. So that is, over the 20 cents there. And that's what I like to see. That's super bullish. That means they're expecting, even better things to come. Now, what does this look like on the charts? That's really what we want to look at. And price to consensus will basically tell us the story. You can see the turnaround here. So 2021, 2022 was the boom year during the pandemic. Everybody racing out to buy homes, record high gross margins, which meant record earnings there, around $10 there for 2022. But then the Fed raised rates. The party kind of ended. Gross margins have declined, but still stay healthy. They saw a 21.6% rate in the first quarter, and they're kind of expecting it to stay around that range, but over 20% for the year. So that's very bullish. Home builders over 20% mean it is usually a bull market when you're seeing that. And now you can see a turnaround in the earnings. We saw it in 2023 as the analysts got just too pessimistic. But we also are seeing it now in 2024, this light blue line, and then 2025 also going in the same direction. Now, the shares have soared. They are at all-time highs here. I believe this is all-time, but certainly 5 years. But because those earnings estimates are on the rise, they're still trading at 8 times with a PEG of 0.8. So this is still a cheap value stock. It does pay a dividend yielding 1.2%. And it is doing a share buyback. It bought back $50 million worth in the first quarter, and it still is a big share buyback program that it will continue on as we go along here. It doesn't have any debt due until 2026, so a couple more years before they even have to pay off any kind of notes. So I really like the home builder stocks here, as you can tell, because I'm very bullish here right now on KB Home. I don't own this stock, but taking a second look now because of the cheapness and because of what's going on with those earnings. And as I said, the orders are up this spring, even with the higher mortgage rates, because a lot of the home builders are still buying those rates down. Now, if we get 8% mortgage rates again, then you're going to see further slowing, and that could impact gross margins because they're going to have to buy those much higher rates down. That costs them more money. But right now we're a little bit over 7% on those rates, so that's okay. And if those rates come down, if the Fed is cutting, even better for the margins for these home builders. So a lot of good going on with the home builders. That's why it's got a Zacks #1 rank with KB Homes. KBH is the ticker, and I'm throwing it over to Dave for his top stock pick this week.
All right, Tracy, thanks for that intro. I've got another top stock pick of the week. It is AXT Incorporated, ticker AXTI. Some of you ZU members out there might think that this sounds rather familiar. That's because it is currently in the Blockchain Innovators portfolio. Let's take a look at Zacks.com and see why I like it. First and foremost, it is a Zacks rank #2 buy. Here we are recording this on Tuesday, April 9th. And you can see that there's been a big jump in the stock. Now, what's been going on? So before I get into the details here, there was basically a hit piece from a short side research firm that came out and said the whole thing is a giant Chinese scam, to which some analysts here on the street replied with their reiteration of their buy and an increase of their rating. So then the company reported preliminary earnings or revenues that were above previous expectations, so the stock is bouncing here. So I guess the jury is out on whether or not this is a scam. A lot of folks out there, including myself, that don't believe that it is. They are reporting after the bell on May 2nd. Like I said, we already got those preliminary numbers. Last quarter had a pretty handy beat, but if you're in the camp of the short seller that it's all just a bunch of nonsense, then I guess I don't know. I don't. It's a lot more research that you'd have to do, I guess, in China, and I'm in Florida, so I don't know. I can only go by what the street is telling me, and the street is telling me current year forecasts call for 25% year-over-year revenue growth. Next year, 37%. So those are huge revenue growth numbers on the street. If you take a look at the EPS side of things, 38% growth this year, 207% next year. So what do these guys do? Do they make the chips? No, they make substrates for chip construction. So they make all the little materials that are used in order to make these chips. Now, something to point out, like I said, it is Zacks rank #2 buy. We have seen a lowering of the loss for the current year, but next year's numbers have reeled in a bit. Now we're looking at 23 cents EPS for next year versus 46 that it was before. So there is a little inch lower in those numbers. Like I said, if you're looking on the surprise side, had a big beat last quarter, the quarter before that in line, and then another beat. So things are moving in the right direction here on this one. The other point I wanted to point out here is my price consensus and EPS surprise chart. Notice that this is a stock that was up 14 bucks. It really came crashing down to earth as these estimates continue to come down. But if you look specifically at this 2024 number, starting to tick up just a little bit. So if we can get the next year number, the 2025 number, to roll over also as this current year 2024 number starts to roll, and you get a couple of these earnings beats, that could be the turnaround story that investors are looking for over the long run, which gets this thing back moving in the right direction. So again, basically a hit piece of a short side firm came out, accused it of being a massive fraud that's going to crater. Other firms on Wall Street stepped in defending their recommendation. I can only go on the numbers that I see here. The numbers that I see here look like a decent idea. That's why I'm naming AXTI my top stock pick of the week. There you have it. That's all we have for Tracy and I. Be sure to check out Zacks.com/promo for this week's deal on Zacks Ultimate. You don't want to miss that. So for everybody here at Zacks.com, I want to say thank you so much for checking us out, and we will see you all next week.